You ever see a company that's just everywhere? They seem to be crushing it, growing like crazy, and then you look at their stock price and it's sinking? It just doesn't make any sense, right? Well, today we're diving into that exact mystery. All right, so let's get right into the story. Uber just dropped its latest numbers, and on the surface, man, they look incredible. We're talking record numbers of users, record numbers of trips, but despite all that great news, Wall Street basically hit the panic button, and the stock took a nosedive. So the big question is, what on earth are they seeing that the rest of us are missing?
To crack this case, you gotta follow the money. And when you start digging into Uber's books, it really is a tale of two very different stories. You have the good, and you have the not so good. It's a real financial puzzle. Okay, first up, the good stuff. And honestly, it is really good. Get this. Uber has 202 million people using its platform every single month. That is a massive, record-breaking number, and it's up a full 18% from last year. Just incredible. And these aren't just people who have the app downloaded. They are using it. We're talking an average of 41 million trips every single day. Just let that scale sink in for a second. That's like the entire population of a country like Spain taking a trip with Uber every single day. And this chart just hammers home how healthy the business looks from the outside. The total money flowing through the platform, what they call gross bookings, boom, up 22%. Their actual revenue, up 20%. And the number of trips, also up 22%. I mean, by any measure, those are just fantastic, super healthy growth numbers. So, with numbers like these, you'd think investors would be popping champagne corks, right? But nope. The stock took a serious hit right after this news dropped. So what's the hidden clue? What's the one detail that sent Wall Street running for the hills? And here it is. This table absolutely nails the problem. You can see Uber beat expectations on the big, flashy numbers like revenue and gross bookings. But then you get to that bottom line, profit per share. This is basically the actual profit the company makes for each share of its stock. They were expected to hit somewhere between 77 and 80 cents, but they only managed 71. For investors who are laser-focused on profitability, that little miss was a huge deal. It was everything.
So why the miss? Well, part of it is some pretty nerdy accounting stuff. But the more important piece is that their actual day-to-day costs, things like insurance and taxes, were higher than anyone expected. That combination made investors worry that maybe the business isn't quite as profitable as it looks. But here's the thing. Is a simple profit miss really the whole story? Or is it just a sign of something much, much bigger? Because it turns out, those financials, they're just a symptom. The real reason Wall Street is getting anxious is because Uber is making a massive, incredibly expensive pivot. They are betting the entire company on the future. And listen, Uber's CEO Dara Khosrowshahi, he's not being subtle about it. He came right out and stated the company's new mission. They're not just a rideshare company anymore. No way. They are in a flat-out race to become the global operating system for driverless cars. And if you think that's just talk, look at who they just put in charge of the money. Their new chief financial officer isn't your traditional numbers guy. His entire background is in autonomous vehicle strategy. I mean, that's a massive signal, right? It's saying that from now on, every major financial decision is going to be driven by this driverless ambition. This isn't a side project. It's the whole ballgame. This pivot isn't just some small shift in priorities. No, we're talking about a radical change to Uber's entire business model. And they're not waiting around. They are going global with this right now. Okay, and here's where their plan gets really clever. Uber is not trying to build its own self-driving cars. That costs billions and billions. Instead, they're taking an asset-light approach. They don't want to own the cars. They want to own the platform, the app, the brains. Think of it like this. They want to be the Android or the Booking.com for Robotaxis, the universal software that runs on all the different cars, no matter who builds them. And again, this isn't some fuzzy 10-year plan. They're lighting this up as we speak. They're launching Robotaxi services in 4 incredibly diverse and complex new cities: Madrid, Hong Kong, Houston, and Zurich. They are seriously stress testing this global model from day one. So how are they pulling this off so fast? They're building an alliance, a kind of federation of the world's best self-driving tech companies. They've got partners for Asia and Europe, different ones for the UK, Germany, and multiple partners in the US. This way, they're not betting on a single winner in the tech race. They're positioned to work with whoever wins. So there you have it. We have our answer. The stock is down because Uber is willingly sacrificing short-term profits to fund this colossal bet on a driverless future. Which leaves us with the final critical question. Is this a brilliant masterstroke or just a reckless gamble? What they're attempting is one of the most difficult balancing acts in business history. They have to keep their current massive network with human drivers running smoothly and profitably. That's what pays the bills. But at the exact same time, they're pouring billions into the very technology designed to one day make that network obsolete. It's a bridge to the future, for sure, but it is a very narrow one. And that path is absolutely full of obstacles. You've got geopolitical risk, since key tech partners are based in China. You've got a massive labor risk in managing the transition for millions of human drivers. And then there's just the huge execution risk. Can they really pull off a plan this complex with 1,000 moving parts, on time and on budget? It's a huge ask. And that brings us right back to the paradox we started with. Is Uber's sinking stock a warning sign that they're chasing a fantasy, sacrificing a profitable present for a future that might never get here? Or are we just witnessing the birth of the one operating system that will move the entire world? That's the billion-dollar question, and this concludes our explainer on the Uber paradox.